Well, that's right. As we enter a whole new day in trade, let's take a look at the forces that are likely to impact our markets, as well as how the US did last night, how Asia is faring this morning, and how key commodities, oil and gold, are performing. Now, for the near term, at least, what it seems is that there's two major fears which have crept into global equity markets, and particularly the US. One, of course, is the rising Treasury yields, which is never good for certain commodities like gold, and it's also not good for equity markets. And then we have fears around inflation firmly setting in. So far, inflation has not been a concern. It seems that from here on out, it may be something that we need to be a little more wary of. However, in the backdrop of all this, Janet Yellen is still trying her best to push through the next round of US stimulus, and that would possibly be the next trigger for the global equity markets. But in terms of what happened yesterday with the global equities, let's get you up to speed. The US market rally fizzled out. The S&P fell for a third straight session. Worse than expected jobless claims data also hit sentiment. Initial jobless claims total 861,000 versus estimates of 773,000. So we really came in higher on that front on the jobless claims. The Dow was down 120 points, S&P was down 17 points, and the Nasdaq was down 100 points. So futures this morning have held steady across the board. However, there's no major uptick seen in the futures, which would, support the fact that we might have more of a rally left for us here domestically. Asian stocks are mixed this morning. In Japan, the Nikkei is down around 0.5%. The Topix is down 0.36%. The Kospi is the Kospi is the only region which is up 0.20%. Australia is down, with the S&P ASX 100 bleeding around 0.65%. So Asian stocks are a bit mixed. We then have EU stocks lower yesterday. Earnings came in from Barclays, which was lower than expectations, and even Credit Suisse was lower than expectations. But nothing major to report, just higher provisions for those two. Stock 600 was lower by 0.8%. That's the pan-European Stock 600 major benchmark. And most of your sectors slipped into negative territory. Oil and gas shares also were down 2.2%. Oil prices also fell yesterday despite a drop in US crude inventories. Brent crude was down to 63.93. WTI was down to 60.52. Finally, gold. Multi-month lows as these US yields creep up. Gold prices don't do well. Spot gold was down 0.1% to 1774, so 1800 now looks out of reach. And then this is the lowest we've seen since November 30th. And then US gold futures were up 0.1 at 1775. So the global cues this morning, SGX is likely to open and remain under pressure throughout the session. Seems that the global rally might just be taking a bit of a breather.